Have you ever wondered if we are living in a financial bubble that could burst and reshape the world as we know it? Fasten your seatbelts because Jeremy Grantham, the legendary investor, is sounding the alarm on what he believes is a super bubble that's about to pop, leaving a trail of economic chaos in its wake. Intrigued? You should be. Let's dive into Grantham's compelling and somewhat terrifying prediction, shall we? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. First, let's talk about Jeremy Grantham. If you know him, fantastic. If not, or if you're skeptical, don't worry, we've got you covered. Grantham is a British investor extraordinaire and co-founder of GMO. He's got an uncanny knack for spotting market bubbles before they burst, earning him a reputation as a trusted oracle in the realm of stocks and bonds. His data-driven analysis isn't just thorough, it's like a financial detective story, piecing together clues that others miss. Grantham's track record is so spot-on that it's almost spooky. With a long-term perspective, he's the wise old owl, warning us about market excesses while everyone else is partying like it's 1999. And let's not forget his commitment to truth. This guy doesn't sugarcoat. His contrarian views often stir the pot, but is all about giving us the straight scoop, even when it's not what we want to hear. Grantham believes the US market isn't just overpriced, it's shockingly overpriced. Ever felt the fear of missing out during a market rally? Jeremy's been there, done that, and wiped out. He learned the hard way that participating in profit-making schemes at the tail end of a bubble is a recipe for disaster. He urges everyone to shake off that seductive FOMO and play it safe. But why? What's so different this time? So, what's a super bubble, you ask? Think of it as a financial perfect storm. And who likes storms? No one. Grantham has a checklist for this. Long bull market, crazy behavior, rapid acceleration, and speculative stocks plummet. Let's see if we really have a super bubble. We've had an 11-year bull run, the longest in history. Check. Sounds good, right? Well, not quite. Remember all the wild stock valuations and speculative trading? That's crazy behavior, so check. It's a classic sign of a bubble. Post-COVID, the Nasdaq more than doubled, rising at over 3 times the usual rate. Whoa, that's rapid acceleration. Check. Starting early last year, the riskiest stocks began to decline. Today, about 40% of Nasdaq stocks are down over 50%. Yikes! And that's another check for speculative stocks plummeting. Well, that's 4 out of 4. All boxes for a super bubble are ticked. Uh-oh, that's a disaster coming. Trailing back in history, Grantham sees eerie parallels with past market crashes. In 1929, 1972, and 2000, speculative stocks fell while the broader market was still climbing. Sounds familiar? The S&P 500 was recently at an all-time high, yet many speculative stocks were already tanking. Deja vu, anyone? Grantham predicts the market will likely crash by 50% from its peak. But here's the kicker. Will it be a slow, painful decline or a quick, catastrophic drop? The massive stimulus programs have left individuals flush with cash, throwing money at every dip. But how long can that last? Ever wondered how the rest of the world is doing? According to Grantham, the US is in a particularly dangerous equity bubble, while countries like Australia, the UK, and Japan are just moderately overpriced. If a global market correction happens, these countries might fare better and recover sooner. Historically, stock markets hate inflation. It crushes price-to-earnings ratios. But strangely, despite soaring inflation, price-to-earnings ratios continue to rise. What gives? If inflation persists, it could mercilessly depress the market. Are we ignoring the warning signs? Grantham believes we are witnessing the end of an unprecedented golden era. For 20 years, corporations have enjoyed soaring profits, low taxes, and little regulatory interference. But could this be coming to an end? Governments are starting to twitch, and the political winds are shifting. What does this mean for the future? Are we really doomed? What do you think of this prediction so far? Buzz the comment section below with your insights. We'd love to hear them. Got Bitcoin? Well, This has been hot for some time now, but Grantham doesn't think much of it. He compares it to the emperor's new clothes. Looks great until you realize there's nothing there. Whoa, that might get mixed reactions, but he said what he said. With smarter cryptocurrencies emerging, he predicts that many will fall by the wayside. How's that for a twist? Looking for a silver lining? Grantham suggests eyeing emerging markets. They're cheap, diversified, and poised for growth. China, India, and Brazil. These economies could be the future in a world where developed markets are slowing down. Ever thought about diversifying your portfolio? Here's a shocker. Developed countries are facing a demographic decline. South Korea, Japan, Italy, and even the US are seeing their populations shrink. This phenomenon is quite alarming because it threatens the very fabric of these societies. A declining population can lead to numerous challenges, including a shrinking workforce, increased pressure on social security systems, and potential economic stagnation. Meanwhile, emerging markets in countries like India, Brazil, and Nigeria are experiencing the opposite trend with their workforces continuing to rise. This significant demographic shift could very well be a game changer on the global stage, altering economic power balances and influencing global trade patterns. You might be wondering, is there a safety gear or survival guide for this upcoming crash? It's a valid concern given the volatility and unpredictability of these changes. For some expert advice, let's turn to Jeremy Grantham, a seasoned investor known for his insights into market trends and economic shifts. His advice is simple yet profound. Stay out of trouble by avoiding expensive markets and stocks. Grantham emphasizes the importance of value investing, which means looking for stocks that appear to be undervalued by the market. This strategy can protect you from overpaying and help you secure investments that have the potential to appreciate over time. Moreover, Grantham advises maintaining some cash reserves. This might seem counterintuitive in an era where keeping money in cash can feel like a missed opportunity due to inflation. However, having cash on hand can be incredibly valuable when market downturns occur. It provides liquidity to snap up bargains when prices are low, allowing you to capitalize on market corrections rather than being forced to sell assets at a loss. In essence, cash can serve as your safety net during volatile times. Grantham's overall message is clear. We're in for a wild ride. The super bubble he warns about might burst, reshaping the financial landscape for a generation. This super bubble is characterized by extreme overvaluation across multiple asset classes, including stocks, bonds, and real estate. When it bursts, the consequences could be severe, leading to significant financial losses and economic upheaval. The key is to remain vigilant, flexible, and prepared for whatever the market throws your way. By following Grantham's advice and maintaining a long-term perspective, you can navigate the challenges ahead and potentially emerge stronger and more financially secure. And as always, thank you so much for watching. Don't forget to like, share, comment, and subscribe. And hit the notification bell for more exciting videos. Stay tuned!